Hey, Alpha fam, welcome back to another episode of Alpha Commission. Let's just take a look at the good old crypto bubbles, and you can see that somebody ate Luna's lunch over here, and Quant getting a nice pop-up of almost 40%. Aave continues to grow. That 15% burst. I was trying to tell people that Aave was looking like it had a couple of juicy setups, and it sure has paid off. Of course, all of the market is hurting these days, and nothing is really doing too well. But you can see in the sea of red at least a couple of coins that are getting a little bit of love, right? Moving on, let's go ahead and talk about that fake US inflation report that was circulated. It turns out that the Bureau of Labor Statistics did discredit it, and so, if you guys aren't aware, we did have an incredibly bearish day, and that was primarily driven by stocks, the stock market being fooled by this faked document, which claimed to have the early numbers for the CPI, inflation data. And it was extremely, extremely bad, over 10%. And that alone should have been a dead giveaway that it was fake because of course, the previous CPI was in the 8% range, and for it to be 10% would just be an incredible feat after everything that we've been doing in order to try to fight inflation. And so it was just highly unrealistic. There was a text that didn't match the actual charts, those sort of things. It was an obvious fraud if you just took time to, really examine it. But it was good enough that it fooled the majority of the market and definitely caused some jitters. So, good on the Bureau of Labor Statistics for coming out and being clear that it was a false document. But we'll see if that has any implications for the chart as we move on. Looking forward, of course, we do have that CPI data coming out today. And, this is really going to, put a fire under the Federal Reserve if the numbers come out bad. So, you can see here that the expectation is 8.8. Previous was 8.6, and so there is this market, expectation that inflation is actually going to be higher than the previous reading, and that's not good. That suggests that the metrics that are out there probably related to gas and oil. Oil had a really difficult month in June, and so it would be a heavy consideration in all of this inflation. But of course, oil can be controlled over time. It just takes a little bit of time. And so, if that's the main consideration, and perhaps, rents or these sort of things, not 100% sure all that goes into the CPI versus the PCE data versus these other inflation reports by the various universities and agencies. But of course, they're all painting a picture together, and, hopefully this number actually ends up lower than 8.8. If it's over 8.8, the market needs to price in, higher inflation and a tougher Fed. So if it's lower than 8.7, then perhaps the market can get pardon me, if it's lower than 8.8, then perhaps the market can get a little bit of a pump or at least sideways action, right? So that's what we're looking for. Ideally, we're looking for 8.6 or less. That would be ideal. That would be saying, hey, like everything taken together, it's really working what the Fed is doing. But higher than 8.8, and it's going to light a fire under the Fed that might make them, need to consider raising rates, maybe that 75 basis points again, and maybe even 100 basis points, which the market has not priced in. And so that scary, fraudulent document that was circulated that suggested 10% inflation, that really spooked the market because a lot of people are very much on edge. We're all looking forward to a possible bounce. But this is one of those very, very key numbers, right? And of course, the core CPI really matters, just like the core PCE data. The Fed really tries to rely on those numbers. It's a little bit more targeted on those type of things. And so, under 0.5% on the monthly would just to be great. And of course, the consumer price index also looking to come up a little bit. So again, like June, it tends to be a very heavy activity month, right? People are driving places, they're celebrating, they're having barbecues, a lot of purchasing going on. People are taking vacations. And so, of course, it's not going to be the ideal month for inflation numbers. But that doesn't mean that the Fed is on the wrong track or that anything is being derailed, okay, or that the mission is impossible. It just means that, data wise, it can be a little bit of a setback. And so there's not much incentive for the Fed to give a holiday to us, to give a little bit of a reprieve to us on those interest rates this month. And that makes an incredibly bearish mood because people are generally expecting the Fed to be reasonably tough on this meeting. And so, hey, we have the opportunity to be pleasantly surprised, but more than likely they're going to stick to the plan, do that 75 basis points, and then maybe next month is the month that we get a reprieve, right? So we'll find out. Hopefully, there are some things that are starting to show up in a good way. A lot of discussion in the financial circles about how, inflation is starting to peak in many metrics, even though there are also, even though it's a mixed bag right now. So everyone's eyes are on that CPI data. Of course, I am looking at the various stocks, and we can see, of course, that this chart used to be bright red. This is the 1 month, okay? So this is the 1 month of the S&P 500, and it used to be bright red the last time I showed you. So the last update, we did get a little bit more green, which, suggest that that concept of peak inflation perhaps starting to be met, is starting to get absorbed by the market as a whole. And maybe there are some signs of life, perhaps for a potential relief rally to come up. And, this is going to be tempered by the fact that, of course, we did get more information about possible recessions, where it's almost inevitable now that we're going to have some kind of recession, and whether that's just a small, like maybe a 2 month recession, and barely noticeable because we're expanding our economy still, and we've got very high employment rates. So it might not be noticed because as inflation comes down, people are also going to be feeling relief, right? At the pump, they're going to be feeling some relief at gas stations relative to the pace of increase of inflation previously. And so this is a very difficult juggling act, and businesses are trying to navigate this, but the market is still very mixed, okay? There isn't a consensus on whether we should have a relief bounce or not, and so you are seeing traders just perhaps jumping sector to sector here or there. This, of course, is the weekly chart. But right now it looks very similar, a little bit brighter than the monthly. But again, last month it was just completely red, and this was just completely green. So the fact that they're starting to get closer together, and that means that perhaps the market has a greater understanding of the possibilities of what's coming up with the Fed, and they're not getting too exuberant, but at the same time, they're not too bearish. They're starting to realize we are getting potentially close to a bounce point if conditions allow for it. And what kind of limitation could we have on those conditions? In my mind, the biggest limitation is going to be, of course, the earnings reports. Now, guys, I don't have time to go over this. In detail right now, but I will on the next Macro Monday episode, where I'll talk about how the price over earnings and these, earnings reports are really going to impact the stock market in a way that isn't priced in and which recession can just deepen, okay? So, good old Mike Burry, of the Big Short or whatnot, he's always bearish, but he has the idea that have only halfway corrected in the market, and he constantly just kind of says stuff, just kind of spitballs it. He doesn't really do any calculations per se that I've seen publicly regarding that statement. But I can show you some math that does validate his instinct on those things. And he's notoriously famous for, calling tops and bottoms of markets. So, if he says something like that, we should probably listen. And so I'm going to explain that all to you on the next Macro Monday. And of course, potentially we could start to see some of these earning reports coming in the following week. And so you'll be able to see just what the impact is on the real market as you see July 21st, right? July 28th, July 28th, July 28th. All of these companies having earnings reports coming up, a lot of them technology companies. And so this will have an impact on crypto, which does follow a lot of the technological stocks, right? It trades with a high correlation to the stock market. So let's go ahead and just move on from here. Just understanding that tonight is going to be very tenuous in the markets, in terms of the setup, and also tomorrow could be a little bit chaotic. The Fed will not be making a decision tomorrow, but the market may be making a decision, and that's a key distinction. Now, you can see that we have found our footing here on the Bitcoin chart. Let me go to a 6 hour. When, it was pretty clear that that Labor Department document was just some fake news that some scammers, probably some whale group, some of those transnationalist billionaires, probably slapped together and had circulated around the internet so that they could get better entry positions. They really messed up our trade, right? They messed up our trade. So we had a good setup and it just got wrecked by that bad news of those faked government documents, supposedly leaks. And of course, that was proven completely false. But let's go ahead and just throw on the alpha channels just so we can get an idea of where we are. And lo and behold, look, we're still in these alpha channels that I have carved out in that kind of sweet spot, at least historically, when we're just talking about Bitcoin's past, right? When we're just talking about crypto, there is this sweet spot and we're just chugging along in it. And you guys know that I carved this out. I made this structure. I made these alpha origin channels, way back at the top of the market. It looked pretty goofy back then, but I've been just fiddling with it until we got to around here. It looked pretty good. And then I said, uh-oh, guys, we're probably going to come up along this yellow line. It's time to just get out of everything. Actually, I mentioned it when we were at the top here around 46, 48,000 bucks, and that there was going to be a breaking point of no return where basically we meet the middle of this charting path, and once that broke, You guys can use EMAs, you can use fibs, you can use whatever you'd like, but price action works just as well. And if you have a good eye for where things are, and you just want to look at support and resistances, well, I'm not perfect at it. Of course, I do like to be a little bit loose and work out of and think out of the box here and there. But I think I pegged it pretty well, and when we broke down from there, that was just the point of no return. And then there was one more, where we had a lot of this support over here. And, people are talking about these numbers as if they're the support that we're going to drop to. And that may well be. But what they had what most people just have a strong inability to do is to think about it diagonally and how important that diagonal was. And of course, as soon as we lost that diagonal, we just plunged straight to hell. And guys, like that's the same like 11,000 level, right? That people are talking about. Like, they want either this 14,000 or this 11,000, but that 14,000 had no significant diagonal. Okay, so I don't think that 14,000 is that relevant. Okay, just like this previous all-time high, right, over here at 20,000, it had no significant diagonal, right? So we just cut through it, right? The chart did not care about $20,000. It gave it gave no flying F's about 20,000 bucks. But I'll tell you what it did care about. It did care about this diagonal over here, which just has lots of supports. And so perhaps that $11,000, that $12,000 is going to be a pretty relevant number as we fall down. I'm not sure, but maybe, right? And of course, we are entering into this area where we haven't really, had much price action in the recent history, but we did get a fair amount of price action in Bitcoin's past. And so, what we could perhaps consider is that, that this green line is pretty significant. We had a nice kind of lift off from this region, if you don't count this dip down here. But otherwise, we pretty much have been like just accelerating off of this green line. It's basically like the master origin line of Bitcoin, at least for this kind of modern era. I have a longer version of this that goes back even further, and it's a little bit more fine-tuned. But 2015 works pretty well. And so you can also see the channels right here because of course we don't hang out in these type of low areas, right? So it's not necessary to be so perfect on this back information, but if we do, break down from this bloodline, basically I call it the bloodline because we are absolutely bleeding to death if we break that line, right? Like Bitcoin typically is supported on that line. So if you break my bloodline, I mean, we're going to touch the grass, right? And we could be put under, right, under the grass down here. And hopefully we do, because then that would be a great buying opportunity. But for anyone holding on to their coins and for a lot of these institutions that could get liquidated, that could be absolutely terrifying. But guys, I've already proven to you how significant these diagonals are, whether it's because of an algorithm or it's because of bots, or whether it's because of just traders mentality, as a collective whole of humanity. I don't really know. Okay, maybe it's pegged to the stock market in some abstract way, and I just haven't seen the exact correlation yet between these specific levels. But there is something to this. And so, could we imagine, if we just saw the lowest drop down here, could we imagine that Bitcoin could come down to 7,500, perhaps 9,000, perhaps 10,000, perhaps 14,000, or perhaps 17,000, 16 and a half, whatnot? Then, yeah, I mean, we definitely could. All of these levels are very relevant and they have horizontal they have horizontal counterparts that really do match these diagonals. And so that's kind of a confluence of geometry, which, of course, math can be expressed in geometry. And, people say like the entire universe is basically a mathematical equation where space itself is a mathematical equation of all these distances and so how do we interpret just these type of coincidences? Well, we have to just assume that there is some math behind it, and it's just so abstract, or it's so convoluted that we just can't type it out ourselves, right? You would need some type of AI. So, what would another drop potentially look like if we are forming some type of bear flag after bear flag after bear flag? I would just suggest that perhaps we could see something like this. This is basically a fractal just taken off of the previous one, right? And so, where would that lead us? Oh, lo and behold, it would lead us right on the diagonal of that COVID drop. Imagine that. Guys, again, like these diagonals are really important. So, could it be front run perhaps at 13,500? Maybe, maybe. Could it go to the bottom of the channel and perhaps hit a channel lower at 10,000, 11,000? Maybe, we don't know. It's just kind of suggesting a ballpark. And because there's obviously a flag pull and a measured move, we can consider that we are going to potentially be testing this green pastures kind of area down here where we'd really love to buy. We'd really love to DCA in these areas compared to, this kind of gross, disgusting, toxic area up here, right? And of course, I wouldn't really want to buy above this white line. That's just me personally. It just never seemed to make sense to me. But as we broke down from there and approached the bloodline, things start to look a lot more interesting, especially in this really like a nice kind of pasture area where we might get a nice bounce off of perhaps. This fractal doesn't actually have to play out. And so what could happen is that we get pretty good news in the market somehow, and we just kind of, either walk up slowly, right? Just slowly appreciate over the next year or two, who knows? And then one day, pow, we just, find ourselves back at that white line, and then we could have another bull run going on. You never know. It could just happen like that. That's what happened in 2018 and 2019, okay? Like we just met the bloodline, we tagged it, and then we went on our way. And that's how simple it was. Like that was the bottom of the market. Well, guys, it could happen again, except that we do have this kind of bear flag being put in, which would suggest perhaps a fractal of COVID is being put in. And we also have the super cycle on stocks, which I'll talk about later. But you can understand that that super cycle on stocks, if it continues to drop down, which I'll explain on the next Macro Monday, how that is possible for us to continue to get dramatic drops in the stock market due to the price over earnings ratios, which is it's going to be an interesting episode. Please watch the next Macro Monday episode. It's going to be important, very important for you, okay? So let's go ahead and jump out of the alpha channels. I love showing those ones. I think it gives a good context of where we are because a lot of times you're just staring at the chart like this and all you see is that your money is in free fall. You don't know where the bottom is. It's just very confusing. But if you can put some context to it and you can really see what's going on, then you can say, aha, I shouldn't be so scared anymore. Like I should be way less scared than when we were up here. This is where I should have been scared. We were in the collapse zone, right? Like this was the collapsing zone. Everything collapses from this area. But down here, things start bouncing. And so, you know what? I should start feeling a little bit more confident in this area. And that could give you a huge change of perspective because, this is where you want to be. You want to be, hugging that bloodline, or you want to be, touching the grass down here in this green, lovely buying range, right? We just want to look. And if we can ever, just touch the earth down here, right? Really just get a handful of soil, that stuff that Bitcoin grew out of, basically, right? The origin of Bitcoin, right? Like if we could ever touch that zone, I mean, it would just be amazing. You would probably have just nothing but profit for the rest of your life in this asset class if we could get into these areas. So I want you to think that way, because although it doesn't have to play out that way, although there is something to be said for just stuff just double tops and then it dies and it was just a fad that goes away forever, right? I just don't think that Bitcoin's going to be one of those things that just goes away forever. Countries are adopting it, institutions are adopting it. There are ETFs and things like that. So while any of your S coins, right, your alts may just disappear, during a bear market, Bitcoin's going to stick around. And so you probably want it at the best price that you can get it for. And honestly, I'd rather just sell all my S coins right now and buy, pure Bitcoin. And then, however long the bear market is, at least I have my Bitcoin. The Bitcoin is what's going to start popping off first. We'll know that a new bull market is on, and then you can start buying whatever altcoins exist in that new market, be it half a year from now, or even 2 years from now. At least you will be in something that endures, as opposed to something that just died because it was some metaverse fad or something like that. There's a lot of weirdos on YouTube trying to pitch you every type of gaming coin and every type of weird DeFi product. And it's just, guys, those things, a lot of those things are just going to die and they're never going to come back. Alex Becker, I mean, shame on that guy. Shame on Alex Becker. He's going to do extremely well in a bull market with whatever comes out in a bull market, but he has absolutely no idea about research or what coins are actually going to survive into the next cycle, let alone what people will want to buy next cycle. And so he should not be pushing you to DCA into gamer coins or metaverse coins or just crap like that, because those fads are gonna die. You know the life of a video game is. Now think about the life of a blockchain video game. People hate that crap, okay? They hate it. They'd much rather play, some type of AAA game, on their PS5 or whatever. And, to think that they're really going to go like 2 years back to like trade these stupid metaverse and blockchain video games. Give me a break. They're going to look so outdated and clunky. They already are outdated and clunky. Okay, this market still has catching up to do. Shame on Alex Becker and all those shills with all their stupid projects. I mean, come on. You guys know what are the big coins that could survive, and even some of the top 20 coins don't survive a bear market. So if you're buying in these areas, and you're DCAing, which you don't have to do. You can wait for some type of accumulation pattern. You don't have to buy the absolute bottom. You don't get an extra award. Nobody's going to hand you some certificate of, validation because you bought the absolute bottom. If you bought some confirmation of a march up, right? I mean, there's a ton of room, right, for us to go. So, if you just buy into some higher lows, that's perfectly fine, as opposed to trying to buy every step down and you never know, where it's going to go next. So, guys, and also you don't know how long the bottom is going to last, right? How horizontal it's going to be for how long, and you may want to use that money for your family or something like that. So just, take some consideration into the purchases that you make. Let's go ahead and see if there isn't, some type of, key things on the chart here. Of course, tomorrow probably you're going to be watching this and the data is already going to be out. But tomorrow we should get that CPI data. And look, I mean, those whales made the market extra bearish, okay? We were supposed to like have a drop and maybe a pop and, some type of fade out, maybe something like that, right? Like that's more of a natural pattern. This is just gross because of that CPI rumor that ended up being untrue, right? The 10% inflation. And so I think the market could actually end up correcting for this. Just in my estimation, I would just guess that probably, we're going to get a little bit of a curve up, and that could end up working out in the favor of at least a short-term long, a not necessarily a huge long. This money flow still looks pretty bad. Okay, I don't like the look of this at all. But and that that kind of negative line is just, it has a pretty strong, trend here. So I'd personally just wait until this curves up a bit more, just me personally, maybe by tomorrow morning. But you look at our MACD and it's suggesting that there is the possibility for a pop-up. When was the last time that happened? We got this one right here, and that was a nice, what, 20%, something like that. So perhaps we could get 10, maybe 15%. Who knows? If it's a very similar kind of wave here, right? Perhaps it has the same amount of energy. We also have a very similar setup on the RSI, right? So potentially, if this crosses this line, we could have a nice pop up and a little bit of a run. I'll have to wait a couple more hours. It is midnight over here in California, and so I'm not going to be able to find out until early tomorrow morning. We're not overheated right now on the 6 hour, so probably by tomorrow morning we're going to be, in a place where we could potentially launch. And then also on the 6 hour here, we have, the Stokes on the ground, but pointed up, and that's important. So if we get under 19,400, then that could be a bit dangerous. We're 19,500 right now. So looking okay. If we just hold this level, not too bad. I think 19,500 is pretty much the zone we need to hold. And if we break down below that, then, probably we're looking lower. That could easily happen, so make sure that you have your stop losses perhaps in that $19,400 area, right? Maybe that would make sense. Let's go ahead and, I'll just show you that at a different time, but let's go ahead and look at the local setup. So you can see here, how those whales with their fake, CPI data kind of messed up the fractal that we were chasing. And because this was an artificially strong downturn. Of course, there could have been some type of a drop, but it shouldn't have been sustained the way that it was, unless the market had been spooked by that fake document. But we did get a bit of a pop-up as suggested. You can probably see that better on the yeah, on the 1 hour. Actually this was just a steady chop down, but we could have gotten this little pop and then perhaps come back down to trend and then gotten a nicer pop. Let me show you. I did move this line because of how the market sunk today, and learning that it was a fake document, I kind of intuitively just understood that that was like a little extra bit of bearishness. And if had we broken the diagonal that was basically set by this, effectively, a double bottom on a diagonal here, right? I mean, probably I could draw it like, let's just see. This stuff isn't perfect. You know what I mean? something like this, right? Something like this. And there's a little zone here. It's not just like it's one line, it's a zone, right? And so this zone, of course, this was the scary wick down, so the wick's going to be a little bit longer. This one's, just trying to find its footing. And then what we really had to do was just kind of hold on to this area. If we had broken down from there, I would have been like, okay, yep, we're coming down to 18,500, perhaps even 17,500. But the fact that we were able to hold this diagonal, and we haven't really lost it yet, it just, for me, that's a good sign. That suggests that we've basically reloaded. And if there's anything bullish, if there's anything okay in the news, that there is the possibility that we pop back up. And even if it ends up being limited somehow and we come back down, maybe, the shenanigans will continue in the market for a little bit longer, sort of like here. And then the market's going to decide whether the data is actually good, and then perhaps we could have that best case scenario that I suggested yesterday in the Macro Monday video. Maybe we could have that best case scenario for a potential relief rally. Or perhaps they're just going to say, well, that probably wasn't good enough. And so it's going to sink, and the market's probably going to build in, the what they expect the Fed to do, and that drop could take us significantly lower, right? And how low could it take us? Well, it really depends on how bad that the CPI data actually is, but it looks like the market has already built in some negativity, so there's a good chance that we're not going to go as far as some people would think unless we really get hit hard. Okay, so let's go ahead and just take a look at the channel that we're in here. Oops, I should be off of log. There we go. Let's take a look at our diagonal channel, and of course this is the macro channel that I've basically been looking at for a long time here. Let's turn off local and this group 4. If we just look at fibs, okay, just look at fibs, then we could suggest that, first of all, we bounced off the 786, but then the 886 actually aligns. Where's that fractal? Oh, that's really convenient. Look at that fractal, okay? This is also the measured move of this one. So the fractal and the measured move suggest that the 886 could be overshot a bit to perhaps 8,500 and then perhaps settle in around 11,000, perhaps let's say 250, 11,400-ish. And, of course, could we have a wick lower or could we perhaps stop earlier because this chart is getting pretty low? That's probably going to be, dependent upon the stock market's reaction to the Federal Reserve on the 27th. And I would also like to point out that this fractal, drops us right onto basically the Fed's decision date. So let's just say that, say it something like this, and the market builds in the bad news ahead of time, then perhaps the Fed just meets the market's expectation, and then we could go sideways or perhaps have that relief rally from here. If we're not able to get it in our current position, then perhaps we can get it from around $10,000, okay? Guys, this is getting a little bit like 3D chess. We're starting to talk ahead of the market now, and so don't take this as like, some type of gospel or anything. So we're just looking forward to put the potential setups. Alternatively, we break out of this long channel, perhaps around 22,000 to 23,000, and we sit on top of that 21,500 number. And then, to be confident, you would want to see us to sit on top of 23,000. And if we are sitting on top of 23,000, then you could pretty reasonably suggest, at least on the Bitcoin chart, that we are looking bullish and that we've done something that we haven't done in months and months and months, which would be breaking out of this channel to the upside. Okay, we've poked through the bottom a couple times, but to break to the upside would be very interesting. Do I believe that's more likely to happen? No, I think more likely this fractal is going to play out. This bear flag is going to play out. I think the Fed probably isn't done with what it has to do. And so, I think this month is going to be a little bit more pain. That's just my preference. Of course, yesterday I gave you the best case scenario. And next week I'll give you the the worst case scenario, at least in my mind. Let's see, what else do we have here? Of course, this is the measured move down, so you wouldn't be too shocked if we ended up in that $12,000 to $10,000 area. But of course, we do have a diagonal here, which if you just look at these kind of like spider lines, they've played out pretty well. I mean, can't really knock it too much where all these bouncy areas have pretty much aligned with some type of a spider line here. And so if we do use the bottom of this wick, just like the bottom of this wick, and to some lesser extent the bottom of this wick, well, we did get a little bit of consolidation right there, so maybe it's true. You could consider potentially that $16,500 might actually end up being a resistance. So I just want to warn you that 16,500, which does have a little bit of this area on the chart and aligns with, yeah, aligns with a little peak right here and a little bounce right there. That 16,500 could potentially give us a bounce. And and so it could end up front running the measured move of that bear flag. And that wouldn't be too unusual for Bitcoin, where we did see like something like this, right? You got kind of a triple bottom there, and then we sprang up. So potentially, if we do see something like that, um, perhaps that also could suggest a relief rally where maybe the market has pretty much built in what it needs to build in terms of negativity and expectations. But of course, next Monday I'll make an episode where I'll argue that hasn't been built in yet. But it's going to be a good episode next Monday. But for now, just to be aware, 16,500 could be a little tricky area. It might be a fake out or something. It could end up being a bounce off of that. But alternatively, we might be looking, at some middle ground at like 14,000, this kind of like little, the top of this chart right here, and this little wick, and this kind of little consolidation area, 14,000, so 16,500, 14,000, and then that 12,000 to $10,000 area, which the measured move kind of aligns with. I mean, it could end up being any of those three, but those would be, of course, the major targets to be thinking about. And again, like this is a very sloppy structure up here, so this could be, shorter than we think, right? It could be longer or it could be shorter than we think. Let's say that we just measure it from there, and maybe we ignore this thing, then maybe it's just, 12. But anyway, it's pretty similar, right? So let's give it its due. Let's give it the full length. Just have the understanding that 16,500 and 14,000 could potentially also be little bouncy areas, okay? Let's see. I think I do want to show you just a little bit of this arrows concept that I have here because this is going to be a little flavor for Monday's episode. But you can see that we do have, even way back here. Let me zoom in so you can see that. Even way back here, we have these little, triangle structures, right? These bullish descending triangles that break to the upside, and they support the entire Bitcoin chart when they do break off of this support in particular, right? This diagonal support, this one in particular, boom, 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 right? Three times the entire weight of the crypto market has bounced off of this line, and it pretty much aligns, with the origin of Bitcoin. And so that would be suggested around 8,000 to perhaps $9,000. And so personally, I've got my eye on that spot ever since that Binance that scamwicked down to $8,200 last October. I'm not going to forget that. It's burned into my memory, it's burned into my mind. And if people aren't aware of that, then good. I mean, I hope it's just you and me, Alf fam. And if this market does end up getting bludgeoned to death and like sinks into that $8,200 area, maybe we could just consider to buy if it wicks there. I mean, it might be something interesting, right? But guys, you look at this. Look at these radials. Okay, again, like those radials. I'm telling you, this is real trading. It does end up working out, and I don't know how or why. I don't have a grand theory for this. I'm just saying that the bots and the algorithms, they do something with it. The price action ends up working out this way. And even if we ended up going sideways, I think that that would be a great buy. And then you have to consider another thing, right? You have to consider that maybe that's wrong. Maybe that was just for this era of Bitcoin, and maybe we've moved up a level, just like this had a lower level, right? And then that was the next level. Perhaps the next level yet, the one that we're working off of, perhaps, maybe this one, right? Maybe this one where all of this got launched off of this, got launched here. It just got the whole chart got supported up here. It just launched off of that. There was a huge rally off of this. Yeah, it dipped, but it came back to it, launched. It was just, and maybe just Corona was just like a temporary thing, but the chart got launched off of that diagonal. And what would that diagonal be? That diagonal would be anywhere between $12,000 to $14,000. So guys, I don't want you to give up on that area either. That 12,000 to 14,000. This could be pure greed. This could be just mischief in our hearts, right? Maybe it's really that 12,000 to 14,000 is the next era of Bitcoin, and maybe this chart is sharpening down into that area, and maybe I have this line just drawn wrong because I'm thinking too much about Binance, and maybe it's something more like this, right? Something more like this, perhaps, where this might end up meeting right there at around 14,400, right? Of course, it could be a little bit more or a little bit less depending on how you draw this. If I really, really take in all of the price action, just pin precision there. I mean, it's almost too good how it lines up at, 13,500, more or less 14,000. And so if we get, some type of drop here and, maybe like in the summer, we kind of chop around, right? Then maybe that 14,000-ish area is going to be the bottom, and we suddenly do something like this, and then maybe it's not going to be as exciting as summer, but maybe we end up working our way through this stuff. And alternatively, I don't know if you guys noticed this, but every time we've had these triangles, even right here, even back here in 2017, we bust out of it and then we make the low. Okay, we bust out of it and then we make the low. We bust out of it and then we make the low. It just happens to be at the apex of the triangle. So what would that suggest? Maybe, that kind of relief rally I was talking about, and then we come back and then we capitulate to that perhaps 14,000 area. Or if this bigger triangle is correct, then perhaps something like this, and something like that, just something weird, right? Something weird. Okay. And guys, I don't want to go too much into that. I'll cover more of that in the Macro Monday episode. but you can see these diagonals don't really line up with this 14,000 triangle, okay? The radials themselves line up with that $8,200 area. And so although the price action so far lines up here, I just really want to be open-minded to both areas, as this is a little bit confusing, okay? It's not like there's a perfect science to this. And also, in looking at this one, it's not like I had to draw it from here. I mean, I could do that, it's gonna have this, it basically has this touch right here, right? I could do this kind of thing. There's the majority of the touches right there and right there. And so we still have the breakout up here, but you can see that before we get that final breakout, there is this type of formation where, oh, okay, I should touch this high right here. But in reality, that ends up being just a breakout point before we come back to here. And so just to go over to that big triangle again. So it could be a very similar thing happening right here, where I touch the top of this high right here in order to get this more narrow triangle. But then what might happen is that we end up working our way across this, basically dumping down, maybe breaking out, and then like capitulating sometime later on, right? And then we find ourselves at that 8,000 $200 level, just perhaps months down the line, right? And maybe this is how it works out, or it could do something totally weird and totally unexpected, okay? Maybe it goes from the bottom this time. I don't know, okay? But hey, just historically speaking, we do have this kind of funky fractal that is playing out, and so I wouldn't necessarily dismiss it just, out of ego or out of saying that's not real trading or any of this stuff that people like to comment on with out of the box thinking, because sometimes that out of the box thinking ends up being right. And it can also inspire some new perspectives on what to measure legitimately as we go forward, level by level, not really like so exotic, right? And of course, none of that is too relevant right now, as so much as these levels are, right? So we're going to just play that by ear. And, this is where we are really in the charts. But I do want to give you that kind of big vision, because most likely we're going to have a breakdown soon. And oh, is Bitcoin popping up? Look at that. It's been popping up. I told you it was a high likelihood of it popping up here. And sure enough, we got that. So that's interesting. Let's see. What was that? Let me see. Oh, look at that. That was a nice strong pop. That was almost 2%. That was almost a 2% move. And man, I wish I had caught that one. Yeah, that was actually almost 2.5%. Of course, I was talking about this one potentially being the launch pad for that. So there you go. You see it. You see it live in person. We do see this turning up here. The oscillators getting that positive slope, a suggestion that there is a possibility here. Oh, look at that. 4-hour money flow popping up, about to cross bullishly on this one. I don't like this ADX being pointed down while the green is popping up. It does suggest it might fail, at least on its first attempt. Of course, we do have the MACD continuing to approach each other, so maybe it just takes a little time to work out. And our volatility is expanding and has crossed its EMA, so that's good news. So yeah, maybe we could just have a little bit of bullishness, but we do have this diagonal that it is going to have to break above. So that could take a little bit of work, and maybe if you can catch this video early enough, maybe you can find yourself with a little bit of a setup that perhaps could make it worth having listened to this video if we do put in one of these kind of pop-ups to perhaps this white line, perhaps around 20,000 bucks. Okay, nothing too ambitious. Who knows how high it could go, but 20,000 would be a pretty reasonable play from this $19,000 area. And then perhaps it has some fake outs or something like that as we go forward and either goes down or up, right? Okay. Thanks for joining me for Trading Tuesday. And, that was your alpha for the day. Stay safe and happy trading.